Hey, welcome to the TMT channel. I am your 10-minute teacher. I am a chartered accountant who makes under 10-minute videos to explain all accounting concepts of class 11 and class 12. In today's video, we will be further practicing journal entries. Before starting, if you haven't already watched my 3 under 10-minute videos on traditional approach, modern approach and journal entries practice 1, please do so. You need to know them all for a proper understanding of journal. Before jumping to practice, we will have to first understand an important concept, the concept of abnormal exit of goods. To understand abnormal exit, we need to know what is normal exit. Normal exit are of two types, sale of goods or purchase returns. Only in these two situations will an exit be called normal. But for abnormal exit, there are multiple situations, such as goods lost by fire, goods given as charity, goods distributed as free samples, goods withdrawn in the form of drawings, or goods used to manufacture assets. In each of these abnormal exits, there is only one treatment, that is, you will credit purchases account. To summarize, for any abnormal exit of goods, you will credit purchases account. Now let's go to the practice question. Journalize the following transactions in the books of BTS for the month of September 23. पहले journal बना ले, proper format में, date, particulars, LF, debit rupees, credit rupees. Then let's come to the first transaction. September 1. Business started with cash rupees 50,000 and furniture rupees 20,000. In this situation, we will not create 2 accounts. We will create 3 accounts. Cash account, furniture account and capital account. The journal entry will look like this. Cash account debit, furniture account debit, to capital account, being business started. Cash and furniture are both debited for the same reason. Debit what comes in or asset increase debit. Capital account is credited because credit the giver or capital increase credit. This journal entry, जिसमें there are more than one debits or credits, is called a compound entry. जहाँ एक एक डेबिट क्रेडिट होता है is called a simple entry. Knowledge of simple entry and compound entry is necessary only from a theory perspective. Sums में ये important नहीं है, but it is important for you to know this. Next transaction. September 4. Purchase goods from Jimin worth rupees 60,000 at 10% trade discount and 10% cash discount. Made immediate payment to avail discount. For this transaction, we will create 3 accounts. The accounts are purchase account, discount received account and cash account. The journal entry will look like this. But ये तो थोड़ा confusing है. Don't worry, we'll clarify everything. Purchase will be debited because debit all expenses and losses, or expense increase is debit. By how much? 60,000 minus 10% trade discount, 54,000. Now, we paid immediately to get an extra 10% cash discount. So discount received is credited by 54,000 into 10%, 5,400. It is credited because credit all incomes and gains, or revenue increase is credit. Now, after getting that extra discount, we make the payment. 54,000 minus 5,400, 48,600. Cash will be credited because credit what goes out or asset decrease is credit. Being goods purchased from Jimin. I hope you followed this transaction. Next, September 11. Sold goods to Jin rupees 1,20,000. Now, the journal entry for this is Jin account debit to sales account, being goods sold. Jin is debited because debit the receiver or asset increase is debit. Sales is credited because credit all incomes and gains, or revenue increase is credited. Next, September 15. BTS withdrew rupees 10,000 from the business for personal reasons. The journal entry looks like this. Drawings account debit to cash account, being drawings made. Drawings are debited because debit the receiver or capital decrease debit. Cash will be credited because credit what goes out or asset decrease credit. Next, September 20. Jin turned bankrupt. He could not pay his debts. First, we need to check how much did Jin owe us. We sold goods to him for 1,20,000. So, he owed us 1,20,000. But abhi wo bankrupt ho gaya, so abhi he will not be able to pay us. That entire 1,20,000 will now become a loss. The journal entry will look like this. Bad debts account debit to Jin account. Being bad debts recorded. Bad debts is nothing but the loss. Therefore, it is debited because debit all expenses and losses or expense increase is debit. Jin will be credited because as per the modern approach, asset decrease is credit, or as per the traditional approach, credit the giver. But what? How is Jin the giver? वो तो bankrupt हो गया, वो तो कुछ दे ही नहीं रहा है. This is one of those issues with traditional approach. It is not applicable everywhere. Stick with the modern. This is my opinion. Are you enjoying this style of learning accounts? If yes, learn each chapter with me. I am conducting a chapter-wise crash course in Jan-Feb 24. Learn each chapter individually from me. No need to pay for the entire subject. Pay only for the chapters of your choice at a reasonable rupees 199 each. Join my Telegram group for further details on the crash course. You can scan the QR code in front of you or click on the link in the description below. Next transaction. September 23. Goods distributed as free samples to increase product awareness. The journal entry will look like this. Advertisement account debit to purchase account. Advertisement will be debited because debit all expenses and losses or expense increase is debit. Purchase account will be credited because abnormal exit of goods. Remember? I hope you do. The narration will be being goods given as free samples. Next transaction. September 28. Monthly salary is rupees 15,000, of which only rupees 12,000 was paid. This means that in this transaction we will create 3 accounts: salary account, outstanding salary account and cash account. Let's see the journal entry to understand this better. But this is very confusing. Let's break it down. Salary will be debited because debit all expenses and losses or expense increase is debit. It will be debited by 15,000 because that was your total expense, out of which you pay only 12,000. So cash will be credited, credit what goes out, asset decrease credit. Out of 15, you have paid 12, 3 is yet to be paid. It is an unpaid expense, which is nothing but a liability. You create a liability in the name of outstanding salary to the extent of 3,000. Outstanding salary will be credited because liability increase credit as per the modern approach or credit the giver as per the traditional approach. Giver? How is outstanding salary the giver? That doesn't make sense. This is one more example of when traditional approach is not applicable. Last transaction. September 30. Traveling expenses amounted to rupees 7,000. The journal entry looks like this. Traveling expenses account debit to cash account, being traveling expenses paid. Traveling expenses will be debited because debit all expenses and losses or expense increase is debit. Cash will be credited because credit what goes out or asset decrease is credit. I hope you've better understood how to record new types of journal entries. I have broken down the entire journal into 4 subparts of under 10 minutes each. Please check them all out. See you.